Hello, YouTube. It appears like it might not be over because the Bulls just want to do it or give us a Nike swoosh on the chart. When we look to here or the Fear and Greed Index, we are right back here on the kissing edge of getting to extreme greed. So we went into extreme greed, we sold off, and now we're bouncing back up, and it looks like it might not be over. Why is this so interesting? I'll tell you why. Because I love the W pattern or the third test. We get our first test, our second test, and our third test. And now we're flagging out. We broke over with an inverse head and shoulders, and we're both pivoting off of 410. What does this mean? It means that anyone who bought during this period, meaning if they bought, made money, lost some money, they had a chance to sell one, two, and now three, four, five times. Everyone who wanted to just get their money back, they've had a chance now, which is why we're looking for the breakout. I want to show you something that we don't normally look at, but let's understand this pattern a little bit better, right? You lose money. All right, I just want my money back. Down for a nasty cut. All right, I want my money back for sure this time because last time I really regret not selling, came back down, came back up. Now I have to trim. On this third test here, there is indigestion, right? It's like we talked about. You had a Super Bowl meal. Now you're like, oh man, I already unbuckled my belt. Do I go for the dessert or do I take a break and come back and eat more tomorrow? That's what we want to find out. So if you're enjoying this video at any time, I would really, really appreciate it if you could smash that thumbs up and please consider subscribing to the channel if you're enjoying the content. All right, let's do something we don't normally do. So here we're looking at the flag, and I think that with a break over and a pivot off of 410, I'm trying to also just understand what the market's telling me. So what I'm going to do here is go to hollow candles, and please stick around if you want to hear an update on those 13F filings, Berkshire Hathaway, and the reasons why I'm really watching this. As of right now, it is exactly February 15th, which means we are one half of the way through the first quarter, and money managers are being tested right now. They're going to be getting their scorecard in about another month and a half, and we're going to know whether or not they beat the market or not. Market's been on an absolute tear. So are they going to report and say, man, we failed in 2022? The 60-40 portfolio had its worst return in 100 years. That's right, 100 years. And now you're underperforming again into 2023. Why am I paying you to manage my money? You're supposed to make me more. If I can just buy SPY and not pay fees, that's what I'm probably going to do. So looking here to the hollow charts, I know it's a little bit harder on the eyes to watch, but I'm trying to be a little bit objective. And I personally like the hollow candle pattern because what I'm looking for is when we have a full candle or when we have a hollow candle. So a full candle just means that we closed lower than we opened, closed lower than we opened, closed lower than we opened. A hollow candle just means that we closed higher than we opened. Open here, close here, right? 388 to roughly 395. That's we close higher, which means we advanced during the session. So when there is a trend change, we note that here. What do we note? Well, we got two full in a row. Then we got 1, 2, 3, 4. Then we have to go sideways for a bit. We start getting really choppy inside of here, which means we got hollow and full. Then ultimately the full candles just take it. 3 down days, boom towns, right? We got our pop flag, pop flag, pop flag, pop flag. And I've been calling this a pop sag, but as I look at it, I'm like, well, most of these candles are hollow, which means that no matter where we open, we're closing higher. They're bidding it up all day. And I think I understand the reason why. If we look here to what just got released today from Berkshire or Warren Buffett, we heard from George Soros yesterday in regards to SI, Silvergate. And the reason why is because of these things called 13F filings. So Warren Buffett's bulked up in investments, including Apple, Paramount, Louisiana Pacific Farm, blah, 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 as of December 31st, according to a regulatory filing on Tuesday. So what does this mean? It means that as of right now, people are reporting on what they did before. So what did you do as of December 31st? And I think the important part is that if we think about where we are today, they're going to be reporting back on today in about 3 months from now, and maybe a little bit less, maybe a little bit more, depends on when they file, blah, blah, blah. But anyways, when you're looking at what the S&P's return now we're just going to hide all this. I think I explained the flag really well. We got our golden cross. We've talked about that before. We don't need to beat that dead horse. We know we're bullish, right? It's a matter of how bullish right now. So if now we look here to, let's actually go to our, let's look at the weekly chart just really briefly. Let's put these on full candles for those boomer eyes. If you wouldn't mind smashing the thumbs up, I would greatly appreciate it. This right now on the weekly chart shows me that, hey, it's only Wednesday, but we talked about this option implied move going into Friday. It could be 417, 418. Whoa, well, we're at 414. Another 3 points in the next 2 days, and we're there. We're almost in bull market territory. Are the bulls going to do it? Are we ready for more? Looking here to our monthly chart now. Let's go to our 3 boards. There we go. Third one. There we go. Let's put it up on the full board. Done. Let's look at a 12-month chart instead, actually. Why? Well, the market's up by 8.25%. That's the S&P. Let's actually look at SPX, the index. Index is up by 8% on the year. Cool. What's NDX up, or the NASDAQ? Man, NASDAQ's up by 16%. Yep. We talked about this pattern before. You can see I already have some stuff drawn on the chart. It's that head and shoulders, knees and toes. But anyways, the important part is that when we're going to be looking back at this and we're thinking about, okay, there's a whole bunch of stuff drawn on here too. Let me just go to SPY then. We have stuff drawn on here too. Let me just delete it. So right now it's February 15th, which means we're halfway through the second month of the year. So we've done about half of the first quarter, and then we got another half to go. At the end of March, that's when you get your scorecard if you're a money manager, a hedge fund manager. So what everyone's doing right now is like, oh my God, I'm like underperforming. Market's up, like it's on a tear. It's on an absolute tear. And that's why when we look here at our 1 month chart, even though there is, in my opinion, as of right now, there's less upside than downside. If we're over 409, we're in expansion territory. Let's use that same concept here and look at hollow candles. Oh, crap. Okay, well, even though we have one big red month here and the bears loved it, what do we get? We got 4 expansionary months, and the last four candles are expansionary. 1, 2, 3, 4. Man, is it really that simple? We bounce off the short-term price and expand, and then we go higher? Yes. That's like the easiest way of explaining it. There's warning signs, but like for today, we're going to celebrate these bulls because, oh my goodness, are they crushing it? Wow, look at Bitcoin, right? Bitcoin up 4%. Sorry, 4% on the month. It's up 8% on the day. Ether is up by 7 on the day, up by 5 on the month. It appears like we're going risk on. Extreme greed is here. Who's going to win, the bulls or the bears? And I think that right now, the pain trade is still short. Let me see if I can just pull up this data point really fast here. It's the net speculator short positioning. And the reason why I think this matters is because these guys are not very nimble. We haven't had a data print in a little bit now, but there's 200,000 contract short, which means they're as short now as we were when the whole world shut down. Yeah, that's bearish. Are we bearish on reopenings? Are we bearish on things being less bad than before? Are we bullish on no landing, right? It was hard landing, then soft landing. Now the narrative is no landing, which means there's no recession. That's what it is for right now. Whoa, 2.4. Oh my goodness. Whoa. Okay. Mecca revised even higher. So no landing. I guess there we go, right? What recession? Jesus. Okay, well, as we go back to here, all we're going to look at now is going to be a few more things to try to just understand the rest of the layout here. So we talked about this. We talked about 13F filings going back to December 31st. There's a lot of pain right now. And if the market is currently expanding, how is data being interpreted? Beat on CPI? Well, that's a buy. Okay, cool. Core retail sales on a beat? That's also a buy, which means that pretty much what we talked about on the weekend where bad data should be good and good data should be good. Yes. Why? Because the market's greedy right now. The market's not trading on fundamentals. So if the market is being irrational right now, it can remain irrational longer than you can remain solvent. That's the hardest part. So you might be right in the end, but in the meantime, oh man, is there a pain trade on? And it's currently going along. So with that new GDP print, man, I'm getting a little bit spiced up here. And the reason why is because if we now look to the economic calendar, what do we have coming out tomorrow? Well, not that I'm Nostradamus. I can't predict the future, but we got building permits. We got initial jobless claims, PMI and PPI. These are called leading indicators. If they're negative or positive, I just want to see if we have an update tomorrow. Why? Man, everything's positive. Good is good. Bad is bad. Sorry, bad is good, right? Nothing's good. Lots is good. Fed talks good. Fed doesn't talk good. Everything's good. And we talked about that. It's the hollow candles. Why? There's this relentless bid. We talked about it yesterday where the B of A survey showed there is a lot of cash sitting on the sidelines. People are underweight equities, and equities have had an absolute tear or a year's worth of gains in just over a month and a half exactly. So this is now getting pretty complicated on the chart. So make sure to drop me a comment and tell me what you think in regards to the layout. Where do you think we're going to go from here? And if not, thank you so much for watching, and I look forward to seeing you tomorrow. Thanks so much.